Hi, good morning, everyone, and thanks for joining today. And welcome to the Let's Talk About Market live session. So there is some interesting data points that is developing, and this is all happening when the Nifty index is approaching its important resistance level. Now, what does it mean for the Nifty index? Whether it is going to break out, are we going to see a consolidation, or is this a top? I mean, there is a lot to talk about, and some interesting observations that I want to, highlight to you. And of course, then we need to see the data points, how it unfolds. So let's quickly get started. And before that, I just want to mention this right away. For the next, for few days, basically till Monday, uh, I won't be able to do the live stream. That is because we have this annual event of the mentorship. Uh, I mean, we have this annual event with the mentorship guys. So, typically what we do is that there is a 4 month of learning session. And after that, somewhere towards the end of the rainy season, that's where we conduct this annual event. So that's where we'll have this almost 10 hours of face to face learning, meeting, discussing, and all those things. And that's why I won't be available till Monday, but from Tuesday onwards, we'll again be back with the regular stream. So that is one thing I wanted to highlight. Now with that, let's quickly move to what the Nifty index is doing. Okay, please let me know once you are able to see my screen properly, and more importantly, once you are able to hear me properly. Okay, can anyone just confirm if they are able to hear me properly and see the screen properly? Thanks, Narasimha ji. Uh, can anyone please confirm if you all are able to hear me properly? Okay, great. Thanks, CBK, for the confirmation. So, see, now I feel that we are coming to a very, very interesting point. So, all this while when the RMI gave a bullish crossover over here, sorry, when the RMI gave a bullish crossover over here, okay, the expectation was that probably the Nifty index will inch higher. So there was one level that we were watching, that was the 40-day exponential average, and that got broke on the upside. So then it gave a room on the upside towards this resistance zone. Okay, so now when we see the chain of events, this makes it a very interesting point to watch. That is because the Fed fund meeting, I mean the Fed fund rate meeting, that will be tomorrow in the night. So we'll get the effect on Thursday. Unfortunately, I won't be there, but I'll surely leave you with the levels so that you can know how to react, when to react. So yeah, so see, basically, ever since this up move has started, I have been discussing this zone, that is 25 150 to 25 250. Okay. Now I'll tell you the relevance of this zone. Earlier, I had just drawn this line and I had left it like that, but basically there are multiple resistances around this zone. So if I also draw this channel, okay, the upper end also comes to this point. Now we also do a lot of elite wave studies and so on. I don't want to get into that, but the broader point is that this is an important resistance zone. Okay, so see, think of it psychologically. Okay, most of the people, I'm sure, would be watching this level, that is 25 150. And maybe if 25 150 is broken on the upside, people will start telling that this is a higher top higher bottom formation happening, and this is good and so on, right? But what is very obvious to the market is not really the obvious thing. That is what we have seen over a period of time. So that's where I'm trying to watch this zone very carefully. And the reason why I'm looking also at this zone, so see, let me put it this way. Okay, uh, I mean, there is an uptrend, and everything is good. Okay, I think I have no doubt about the medium term picture, which is that it should rise higher. The only thing that I am trying to wonder is that whether we halt over here, do we get into a consolidation or a corrective phase and then rise higher? I mean, that is what my broader thought process is. Okay, so it should not be confused in that sense. Now I'll tell you why I am thinking these points. So one is that, okay, so yeah, so one thing is that the sentiment data. Okay, if you see the swing average swing from the past 2 days, they have been dipping despite the market rising higher. What does it mean is that within stocks, there is some loss of momentum that is witnessed. Okay, now you may say that, oh, is it an cause of concern, can we get a big correction and so on. I mean, not necessary. I'm just trying to highlight you the data points so that you get the context. Okay, so you can see over here the momentum peaked out over here. After that also we saw a rally, but only then we saw a consolidation. Okay, over here we have seen a bit of negative divergence, you can say. While the market has risen higher, there is a bit of negative divergence. I mean, can something like this happen, where the momentum again picks up and rises higher to 80-90? Definitely that can happen. I mean, there is no way to suggest that these things cannot happen. Like you see over here also, there was some dip, but again it went higher. So it does not necessarily need to go down. And that's where trailing with the levels become extremely important. Okay, so I'll tell you the data points that I'm watching and the levels that I'm watching. Okay, so this is one thing. Okay, daily swing. The average swing is another thing which has started to dip a little lower. Okay, the other thing in the diffusion indicator is the RMI, percentage of stocks with RMI buy. Okay, this also has been dipping across the indices. So in the morning, while I was looking at it in the glance, so you can see the momentum seems to be dipping for the last 2 days. Okay, this is same for Nifty 50, Nifty 500, Nifty 100. Okay, Nifty small cap is the only one where it is rising higher, but you also note that the level has now come to 86. Okay, and the other one is Nifty total market. Over there also it is dipping. In fact, it is not dipping as such, but it has flattened out, right? So that's where, I mean, this is also making me a little skeptical. Uh, and as I mentioned to you, okay, that I'm watching for this zone. So for me, the best setup would be that this resistance zone gets taken out with a gap. Okay, anything that gets taken out with a gap and on that day it closes at the highest point, it is usually a sign of strength. Okay, now say for example, you will see these things many times, but I think somewhere in the general election something like this had happened. Okay, can you see this? This was basically the resistance zone that was broken with a gap, and after that the Nifty index nearly closed at the highest point, and after that we saw that bullish momentum, right? So any bigger resistance zone breaking out with a gap is typically the ideal thing to watch out for. Now you know that the US negotiators have come last night, I think, and they are discussing. And then there is this Fed event, and in all this case, basically the Nifty index has rallied almost around 800 900 points. So can it see a 400-500 sort of pullback? Definitely it is possible, but then what are the levels which it should not break? Okay, now think of it this way, that if you were trading, okay, and you have been long, so for the people who are holding long, the best reversal level is the 40-hour exponential average. I mean, as long as this hold, something like this can also happen, where there is a dip and we rise higher. Okay, but the 40-day does not break. The other ones who are extremely conservative and who don't want to take an event risk, they can either book out or tighten the stop loss with the 20-hour average. Okay, because you can see that from this up move, whenever, I mean, the Nifty index has pulled back, the 20 hour has been acting very nicely as a support zone, and it has been rising higher, right? So this is another way. uh, Now, see, for example, if the 40-hour breaks on the downside, I will be a little concerned, and think that a correction could be in play where maybe the pullback goes even till this point. Okay. Or this is the gap zone. Maybe we test over there and then we rise higher. That is the expectation what I would be having. Okay. I'll be very concerned if the daily averages breaks on the downside. Okay, so the daily average is right now around 24,854. So daily averages ideally should not break, because you have to also understand that weekly the momentum has started to rise higher, but we are still not in buy zone. And as I had mentioned earlier, the best setup would be that if this resistance zone is broken, preferably with a gap, and we have a bullish crossover, I think that then I would have no doubt that a bigger up move has started, and I feel that the bread should only widen after that. Okay, but as of now, given that we are coming to a critical level, it is important to raise those alarm bell, because there can be some bit of a short term correction. Now whether that short term correction translates into a bigger correction, we don't know yet, and that's where we need to be a lot more stock specific, index specific, and so on. Okay, now I told you about the three concerning points, right? It is the sentiment indicators, that is swing, average swing, right? The other one that I mentioned was the diffusion indicator, where the percentage of stocks with RMI buy. Over there also we have started to see some dip in the RMI, this thing, in basically RMI, where the momentum seems to be falling. And the last one, which I was watching in the morning, okay, is if you see the RRG index, I mean, the only the sector index, a lot of them are seeing this loss of momentum, be it PSC, energy, Nifty, pharma. Okay, so I noticed that everything related to bank, financial service, private bank, they are all doing okay, and infrastructure is the one where at least the momentum is rising. But apart from that, mostly everyone, we are seeing some dip in the momentum, including the Nifty metal. Okay, so that's where, so then actually I went ahead and I saw the chart, and what I see is that they have been inching higher slowly. Okay, in fact, you can see the Nifty metal, but what you're seeing is that the pace of, I mean, the rate of change within the RMI is plateauing a bit. So can it see some bit of correction and a consolidation till here and then rise higher? Definitely possible. But this is something that you need to keep in mind. Okay, because see, sometimes we end up becoming overly bullish. So we don't want to be on that wrong foot, right? And that's why, I mean, I am actually a very conservative guy. I mean, even if I see that the breakout is gonna happen, then maybe I would well want to buy it above the breakout rather than trying to speculate for that last 50-100 point. I mean, we played from year to year. Now it's better to wait out, and then wait for the confirmation. That is how I would look at it. Some people might have a different view altogether. Basically, some people, the hurdle what happens is that if they sell it over here, they can't buy high, right? And that's where, some guys may face a problem, and then they might, just um, just miss the rally and then curse me. So I am just being very specific. Okay, all I'm looking at is some kind of pullback that is possible, and I have to be mindful of that. Okay, that is all that I'm trying to say over here. There are some positives also that is happening, which is that one is the Reliance Industries. It is trying to break out above the 40-day exponential average. That is a good sign. I mean, this is one stock that has not really participated, but if the US and the India talks goes well, this can be a beneficiary, because they basically refine the oil from Russia and so on. That's where, I mean, because of those tensions, Reliance was getting screwed. I think that should do well if the trade talks goes well. The other thing, which is the sleeping giant, is the HDFC Bank. Okay, and you can see over here, basically on the hourly chart, after an up move, there is a consolidation that is happening, right? So once we break out from this minor consolidation over here, somewhere over here, we should be seeing HDFC Bank also, probably doing well. And because this has also been holding out, the good part is that the bank nifty is now trying to break out from this resistance line, okay, which is basically over here. It is trying to break out from that. The final resistance is the 40-day average. Okay, now because it has been rising higher for 1, 2, 3, 4, 5, 6, 7, 8, 9, and this could probably be the 10-day of up move. So over here also, honestly, I cannot rule out some bit of pullback and then an up move. Okay, I'm once again highlighting it's the minor pullback that I am watching very closely, nothing beyond that, because there are many indices, like, say, for example, midcap. Okay, midcap has broken above the 61.8% retracement level, right? If you see Nifty 500, a similar thing is happening where a previous high is broken and the 61.8% retracement is also broken. Over here also, if we draw this channel, I think it is coming very close to that point. In fact, it might have just, yeah. So it is almost at that point, right? Uh, so yeah, I mean, this is also one thing. The small cap is the one that is, sort of now catching up. It was a laggard and it is now catching up. It has not even done 61.8 yet. Okay, so it has some room left on the upside. So that's where, when I see index by index, the basically, all the broad indices like mid cap, small cap, and all those things, they are coming to a point where we need to be a little watchful. Okay, so uh, what, there is this funny term, right? Cautiously optimistic. So that is what it looks like. Maybe some bit of pullback might actually make the setup a little bit healthy, is what I feel. But given that, Reliance is breaking out, Bank Nifty appears to be breaking out, HDFC Bank is consolidating, but the setup over there also seems to be encouraging. I mean, this can be the joker in the pack, basically. So yeah, I mean, that is the thought with which I'll leave. If you have any questions, I'm happy to take up. But yeah, I mean, these are my observations. You can just let me know if there is any doubt, regarding the explanation that I gave, if you have. So Jaspal, thanks a lot. It means a lot. Thank you so much. So we'll try to conduct this almost every day. As I mentioned, I'm just repeating it, for the next few days till Monday. I will not be there because of the annual event that we have with the mentorship guys. But from Tuesday onwards, again I'll be regular. Okay. Deepak, good question. How to use RMI for long-term investing? So so see, I'll give you in a very simple explanation. Okay, take that explanation and then see the video. You will be able to relate a lot more better, because it is not very easy to explain it in, say, 5-10 minutes. But I'll do my best. See, all we need is two things. Okay, which is that index or stock trading above 40 period on a particular time frame. So this is the first criteria. Okay, and the second criteria is, uh, you know the RMI should have gone back to the zero line and then giving a bullish crossover. Okay, this would be the ideal setup. Now you apply it for daily, weekly, monthly, it doesn't matter, the process remains the same. Now see, I'll give you one example. This we had been talking, while we were scanning the stocks. Okay, so if you remember, we had discussed about Bajaj Finance, Bajaj Finserv. I think when we were doing a scanner, so over there we had this very nice setup. I don't remember whether it was on weekly or monthly, but Bajaj Finance and Bajaj Finserv both had this nice template. So if you see, I think weekly chart, yeah, you can see the weekly chart. Now, does this follow this criteria, which is index or stock trading above the 40 period of that particular time frame? So this is met, right? This first criteria is met. The second criteria is that there should be a pullback and the RMI should go back to the zero line, right? And then give a bullish crossover. So this had happened, right? So both this criteria match, and this was a good sign. Okay, so now typically if we then just do higher top, higher bottom, so basically this low becomes the reversal level, which is 876. And mind you, whenever the weekly RMI gives a buy, it can last for few weeks to probably few months. Okay, like you see over here, November it gave a crossover on the upside. Over here there was a bearish crossover, but all, I mean, if you know by now, whenever the stock is in an uptrend, that's where 20 week comes into play. If the RMI crossover happens but the stock is still above the 20 week, then 20 week should ideally be your reversal level. Okay, now in this case I'm taking week, but it can be anything. If you're seeing daily, it can be daily. If you're seeing hourly, it can be hourly. If you're seeing 15 minutes, it can be 15 minutes. Okay, but that is the process. Now, say for example, Bajaj Finserv, similar setup, right? Up move, consolidation, and then again an up move. Okay, RMI going up, in this consolidation coming back to the zero line, and then giving a bullish crossover, right? So this is the ideal setup that we need to have from a medium to long term perspective. Now, of course, in this, you can go to dual time frames and try to time your entry in a much better manner. Say for example, if a turnaround has happened over here, okay, a turnaround has happened over here, and that's where all those position sizing and all will come into play, which means that the 40 week is saved. And from there, if I get a bullish crossover on the daily chart or something like that, or the 40 days averaging, then that's where I will start building my position. And my last position where I'll be sort of all in is when there is a bullish crossover and the prices are above all the moving averages of the higher time frame. I mean, that's where basically I'll be sort of all in, and I'll have the reversal level, which will be the swing low or something like that. Okay, now it might look that if you are all in over here, say at 2000, the reversal level of 1910 will look a little larger, but please understand that you are trying to play that 15-20% move, right? In this case, even when there was a crossover over here, you can see the price action which we saw after that. So if I see the crossover over here, so you can see there was a 30% move. So for a 30% move, 4-5% kind of reversal is nothing, right? So that's where you will get a good risk reward that is there. And the thing is that if you start buying a little early and so on, your average will be relatively in the middle and not towards the upper end. So that is how we think about it. I mean, other people might have a extremely different view, but that is how we think about it. And I've tried to tell you how we think about stock and execute it. Okay, Ash, really helpful. Can you look at the overall stock options data? So in this, Ash, I mean, see, honestly, see, I'm not much into the options. Okay, I'll be very honest. I used to look at this screen because I wanted to find some range of the stock. Okay, so say for example, if I am bullish on, if I want to see that Reliance is now breaking out. Okay, So I'll just type Reliance over here and then I'll see what is the range that is occurring. Okay. And I can see that there is unwinding happening at 1400, but at 1410, there is some addition that is happening. But at the same time, 410 PE is also adding. So it's nice. Okay. I mean, it gives me a sense that, okay, something could happen over here. So the second thing that I will then do is that go inside the stock and analyze what the option chain is doing on the combined basis. Now you can see that there is such a big OI over here. Now, if this gets unwinded, the next major one that you see is somewhere around 1500, right? So if this shifting is happening, probably then this might end up becoming a good level. So there are of course some OI that is there over here, but this is what would become very interesting, that it might have this room till 1500. And the other thing that you see is that the PCR is also at 0.62, which is still low, right? Now in this case, what I would again see is that option PCR, and this for Reliance. No, let me remove the other ones and I'll see just the raw ones. Okay. And you can see that PCR usually hovers in the range of 0.95 to probably say 0.40 or something like that, right? So over here, whenever it comes, there is a scope of some bounce, which is there. Over here, we saw multiple divergence after seeing an up move, but broadly, if you see somewhere over here, the expectation is of some bounce, and that is what we have got over here. Now, now this leaves me with a scope of an up move probably till 0.9 to 0.94 or something like that, and then I'll watch what it happens over there. But that is how ideally I would see. And there is one more thing that I like to see, which is basically the max pain area. So people who don't know what is max pain area, so it is basically, so say for example, if the max pain area is 1400, so this is where all the people are positioned. Okay. Basically the buyers. So if at all the max pain level is 1400, if the Reliance expires at 1400 level, then all the buyers will lose money. Okay. Typically that tends to act as a gravity. So if at all the stock is rising higher, okay, and the max pain level is not rising higher, then it is possible that it can revert back to that level. Okay. So that's where I look at the trend, and I look at it from a 5-day perspective. So when you untick intraday, you tend to get this screen. So now you can see over here it had gone down. Okay, it had again moved back to the max pain level. Okay, now despite of this up move, the max pain level is not inching higher. So then in the short term, it can again come back. So this is what it is from a very short term perspective. Okay, that is what it tells you. um Now, why I think this is important. I mean, why I look at it is because, say for something like Motherson. Okay, for Motherson, I was watching for a few days. Now you see this how this max pain level is rising higher, but now you just notice the activity from 1st of September. Okay, so from 1st of September, let's look what Motherson was doing. Okay, this is the 1st of September. So somewhere, so say from 1st of September, somewhere over here. Okay, so in 1st of September, it was way below the max pain area. Okay, that is so the max pain area was 97.5. Now let's look at every day. Okay, so if I go on second, so basically I'll get 5 days of data. If it again came back to the max pain area, and then it started finding a little bit of resistance. Okay, third, next day it was consolidating and hovering over there. Okay, fourth, it tried to inch higher above that, but it again went down. Okay, but you can see that the max pain area was over here only. So that means again it is going to come back, right? Because that is the gravity level. Now On 5th, it went down again. Okay, it went down to 94, but still this max pain level was unchanged, right? And then on 8th, it moved higher, and this time it moved higher substantially. Okay, and after that on 9th, it moved higher again, came back to that gravity again, tried to bounce back. 10th, up move. Now so far it is unchanged, right? But now you see over here, okay, up move, consolidation, again an up move. Still, there is no unwinding that is seen. But now in the past 2 days, see the kind of shift that we have seen from year to year, right? And this is today's data, and you can see again that it has shifted higher. So when a stock is in an uptrend, you would ideally want this max pain trend to keep inching higher. So that suggests that there is no scope of a down move. I mean, this is what I have found very interesting. I mean, this I try to see only when I have some position or so, and I want to see whether the buying which is happening, is it backed by the uh, max pin area also shifting higher. Then it's a good sign. Okay, but this I found it very interesting. So yeah, that's why I thought of discussing. Now, if you tell me how to find a trade with that, honestly, I have no idea. But I look at this, this can be sort of your trailing level or something like that. Okay. So, say, I mean, in general, what we think is that if the prices are above the max pain area, generally the trend is good. If at all the prices move away a lot from the max pain area, okay, and there is no shifting that is visible, then there is a risk of a correction that can happen. Okay, I showed you the last 10-12 days of the movement in Motherson. But yeah, that is how it is. So I don't know, maybe you might find this interesting, but that's how I look at it. So mainly in the options, I look at these things. Sometimes it is also important to look at the cumulative data. Okay, that is like the I mean, this is cumulative of all the strikes. Okay, so you can see that the green one is basically the call option, the blue one is the put option. If the call option is rising higher and the put option is also rising higher, it means that maybe a bit of range bound market is there. But if the prices are rising higher, now over here also, if you remove the intraday trend, you will understand. Okay, see at this point of time, you can see that the put, nothing was happening. Even in call there was a bit of addition, but when this up move happened, the unwinding in the call started happening and addition in the put started happening, right? So this is also another way which sort of helps. Now you can see that in this up move that we saw from basically 109 levels or so, so in this, the call addition also happened and put addition also happened. So maybe some bit of consolidation could be happening, but uh, basically, if the prices are rising higher and the call open interest is also rising higher, so somewhere people now think that maybe a pullback could be due, and that's where you can keep a trailing reversal level. But I'm again repeating, these are all for very very short term trading. Okay, 1 days, 2 days, and you want to maximize your entry exit point. That is where it becomes useful. That's about it. I mean, that's how I use it. Maybe other people might have different technique to use it. I am not, frankly, a very good 1 day, 2 day trader kind of thing. So that's where I have my limitation. So just being very honest about it, maybe you can try and explore it. Maybe you might come up with a better strategy. I mean, for example, we created that strike y inside screen, but Mohit Agarwal had a very very good strategy for that, and it worked out very well for him. He showed us, and that's where we thought of doing a webinar on the strike y insights based on his strategy. So I mean, if there is something like that, if you have, please reach out to us. We will see if that makes sense or no. If it does, we will definitely spread across to all our users, because ultimately we all want to benefit out of that. Okay, but that is my limited understanding of options. the scanner work in live market? Yes, we have made all the scanners now 1 minute delayed snapshot. So it refreshes after every 1 minute. Okay, crossing above the zero line to the upward is right. Yeah. So the see also understand one thing. It is not necessary that the crossovers should happen below the zero line or something like that. Okay. It's just that the RMI should come back to the zero line. I mean, this is something it is important. Okay. Now see, if the RMI is not coming back to the zero line and then giving a crossover, then ideally it is not that great setup. Okay, but a setup something like this where prices go above the averages, pulls back, and come back to the zero line, and if at all the crossover happens above zero line, no problem. But the only thing is that this green line should come back to the zero line and then give a crossover. Then we say that one leg of correction is complete, and we are starting to rise higher. Okay. If I have holding Nifty 24,580 levels, can you suggest what can I do? Because मुझे all time high तक hold करने का plan है. Yeah. So this is a very good question, and this is a good conceptual question which I want to clarify. So as I mentioned earlier as well, okay. See, I am suspecting right now that this might act as a resistance, and maybe we get a pullback and so on. But this might be all my khayali pulav and of the data that I am seeing. So that's where price action becomes very important, right? So for me, the Nifty will be very strong as long as the 40-hour exponential does not break. Okay, you see any rally, okay, any strong rallies. Wait, maybe this might not, but see something like this. An up move is there. You will see that the 40-hour won't break. It's when the 40-hour breaks, you need to be a little skeptical. Okay, so so just to answer your question in a very you know straightforward way, my reversal level will basically be the 40-hour exponential average. If this holds, then I can keep thinking that something of this sort may happen, and it will keep rising higher. Okay, and in this case, this average will keep acting as a support level. This is very much possible. If the 40-hour breaks on the downside, then I have to be very careful. Now see, over here basically your risk appetite comes into play. Okay, now you can see that the 40-hour is at say 25,000, 25,012. The actual trend reversal level, now on the hourly, this is the reversal point. Okay, the 40-hour. But on daily, this will be the reversal point. Okay, which is the daily averages, whichever is lower will be the reversal point. So as long as the daily averages does not break, I would be still very bullish. Okay, so it can happen that the that 25,000 mark, which the 40-hour breaks, maybe it takes into account a deeper correction and then we retest, but still it can rise higher. It's only when the daily averages break on the downside, I'll be hell scared. Okay, I mean, I'll be scared of again the possibility of this HNS that was developing. Then I'll start feeling that whether this pullback is done and are we going to fall. Those thoughts will start coming to my mind if the daily averages are broken. But I think till the daily averages are not broken, we are fine. Okay, at the max that we can get is some bit of pullback. I mean, we'll have to live with that. But yeah, that is how I would think about it. Yeah. So Babura, you can just visit our website India Charts. Okay, there is this column of mentorship that is there. You can go over there and you can check out all the details. You can just fill in the details and you will get a call back from our team. Okay, but it is like a 3-4 month program. So this is basically for those who who are having patience, because people try to think that okay, I'll pay and from 1 week onwards I'll start trading. That is not going to happen. I mean, we try to teach right from the base. It takes a lot of time, and you might have to unlearn a lot of things that you have learned. So if you are capable of doing that, only then I would recommend, because honestly, I wouldn't want y'all to have a bad experience. Okay, because if y'all have a bad experience, our name gets destroyed on that front. So that's why I want to just set that expectation. Okay, and you have to be, more importantly, very very patient. DV Ola. So actually, what is happening is that the most of the IPO related, the IPO stocks that have happened in the recent, I think, times, those all things over here, the page is not opening. Okay, this issue we have already reported it. Please give us some time. We will be able to resolve it. Okay, as I told you, we are taking bugs one by one. So as of now, this is not working. You might be able to get the chart and everything. Okay, over here also, if you see, you will get the chart. The only thing is that the stock page is not opening. There is some slug issue that is there. That will resolve it. Okay. So please give us some time and be a little patient. Ash, execute on smaller time frames and look at the sentiment in higher time frame. Perfectly. I mean, you are bang on. That is what we need to do. So from a higher time frame, you need to understand what is the bird's eye view on that particular stock, and then you can come down to the lower time frame which suits you. Could be hourly, it could be 30 minutes, it could be one day, whatever. But that is how you know you can execute. Mahesh, please speak clear levels along with different time frames on the stock as well while analyzing them. Mahesh, see, I cannot cover everything. I have given you the levels for Nifty Index. You can apply the same process for the other indices as well. I mean, see, the whole idea is that I'm not here to give you the recommendation, but I'm here to teach you the process, and that is what I'm trying my best. In terms of levels for the Nifty Index, I will once again repeat. It is somewhere around this zone. Okay, that is 225, 250 to whatever this rising trend line will be. So if there is some consolidation, then this level will go higher a bit. But this, if I draw the parallel channel, so currently that level is somewhere around 25 250 only. If that breaks on the upside, it is good. On the downside, the dynamic levels are the key daily averages, which is at 25 24 855. So until this major zone is not broken, there is a possibility that we might consolidate before rising higher. That is my best guess at this point of time. Max Payne, a good source. Yes, definitely. I mean, I found it very helpful. Maybe I might have a very different way of looking at it, but that is how I look at it. I have tried to basically see a lot of stuff on this, but I don't know. I just couldn't get the satisfactory answer. So over a period of time of watching the data, what I saw that this is very helpful. Like if the stock is in an uptrend, then ideally the max pain level should keep rising higher. That will be an indication. Mahesh, I understand. See, I gave you the best explanation that I could. Okay, I mean beyond this, it is very difficult for me to be very specific. Trading hacks, very interesting insights on max pain. Thanks. The distance from the max pain could provide good mean reversion. We'll look into this. Yes, sure. And please, if you get any more unique insight, do share with me, because I honestly have a limited knowledge in that. Thanks, Deepak. Sagar, sir, can you guide me how to use strike indicators if I find any breakouts or breakdown in the charts? Like I'm expecting a breakout in Tata Motors. So Sagar, this is the thing that you need to just watch. I mean, this now depends on whatever time frame that you're looking at. Okay, the stock or the index should be trading. I mean, this is the most simple thing that I can teach you. The problem is that people will think, अरे इतना easy थोड़ी होता है. खाली ये दो criteria से थोड़ी you can make money. But trust me, it is that simple. The problem is that people want more complicated things. But if you see this now, okay, see, I don't want to recommend anything, but just let's analyze Tata Motors and try to give my honest feedback about it. Now, see, in daily, I mean, it is already rising higher. Okay, in hourly, maybe I could see some opportunity. That is because there is some inverse HNS pattern that has developed. There is a pullback and there is some consolidation, right? So the hourly chart should be interesting. Yes, and see, you can see that the 40 hour, the pullback had happened. Okay, and then an up move had happened, and there is a bullish crossover. So ideally, what I would tend to think is that if this zone is not broken on the downside, it should eventually rise higher. That is because this inverse HNS has also played out. In that case, maybe the expectation would be the height of the pattern, which is, say, it comes to around 790, and the conservative move will be the height of the shoulder. Okay, in this case, whichever is the higher, you can take it, but almost both are around the same point. So if I do it over here, and if I take it from the breakout point, so it comes to around 746, 750 zone, which is around the previous high. So that is what the expectation would be. But as I mentioned, the setup on the hourly chart is very good. So if the hourly, there is some bullish crossover that is happening, then the expectation should be from 2 days to 1 week kind of perspective, where you should be able to see this move. Okay. Now, in this case, how to execute? I mean, these are all personal choices, but I can tell you that what we try and follow is that, say, over here a bullish crossover has happened, averages ke upar bhi gaya, it is good. Maybe we would want to bet on this, say, 50-60%, and the final bet would be once this breakout occurs over here on a closing basis. So this would be the point. So your average will be somewhere around this point. Okay, and then once it starts rising higher, that's where you can trail it with the reversal level. Okay, that is how we think about it. So just to give you a perspective, you can have your own style as well. Saket says Orient Technologies. So I think Orient Technologies might be some new listing. Orient Tech. Yeah. So you are seeing it this blur. That means this is some recent listing. Let me see. Orient Tech. I mean, it is not recent, but yeah. So basically, there are. So we'll resolve this. Saket, please give us some time. This is already there in our horizon. So in basically, if you go to IPO, these all stocks which have got listed in the last few months, we are having some issue in opening the stocks. This will be resolved. I mean, I have already communicated this to the developers. They are taking up issues one by one. Like, for example, if you see, we had a lot of spikes in valuations, right? So say, for example, market cap related, there were a lot of spikes. Now if you see, those all things have got resolved. I mean, if you just go to the fundamental data and you see over here, the spikes are gone. The only issue that is still there is that the data last updated was still 8th, which is probably a week back. But I have again mentioned this to the developers. They are in the process of doing it, and you will see the updated data. So that way we are taking issues one by one. This issue will also be resolved. Okay. In Geo Finance, prices is moving up. So DV, what I would think is that I wouldn't take a lot of things on face value for geofinance. That is because it is a newly listed thing. Okay, I'm not sure what is the high and the low range of OI is for geofinance. So I wouldn't read much into it. If I want to do anything, I would probably apply this simple technicals of RMI and indicators, and that's how I would think about it. I wouldn't read too much into the OI. Exactly, that's what I'm seeing too in the chart. I'm not a subscriber, so just wanted to know and learn about the indicator. Yeah, definitely. I mean, you can see the setup you pointed out was very good. So, typically what happens is that if there is a price pattern that is there, okay, where when price pattern breaks out and plus there is a confirmation on indicator, it is even better. Okay, I mean, you get a lot more conviction out of that. So, yeah, I mean, great. I mean, good one to point out. and it was a very perfect example of up move consolidation and then trying to rise higher. So yeah, with that, we are done with the 50-minute session today. I stretched it a bit because sorry that I'll be not there for next 1 week. So maybe from next Tuesday onwards, we'll start taking this up. But I'm just highlighting once again the important levels for all you guys, uh, because we are at an important point. Okay, on the upside, it is basically 25 250, 25 260 kind of zone, which is basically the upper end of the channel, and this box area that I've drawn. Okay, and on the downside, it is the daily averages, which will be very important. Okay, this needs to break on either side, on the upside or on the downside, for us to see a trending move. And if the daily averages breaks on the upside within this next 3-4 days, I'm hoping that does not happen. But if at all that happens, then you have to be mindful as well and be a little proactive. Okay, so that is what I'm seeing. Watch out for bank nifty also, what it does, whether it is able to break above 40 or no. And more importantly, if it is breaking above the 40, first thing to watch is that whether it is closing above that. And if it is closing above that, then whether the next day it is sustaining above it or no. Because over here also, it was giving us that promise of a breakout on the upside, but that did not happen, right? It rose higher, eventually closed lower, and then we ended up seeing a correction. So it is at an important point as well. And because Nifty Bank is a heavyweight within Nifty, it is very interesting to see what it does. Okay, so yeah, that's it from my side. Thanks a lot, and probably see you on Tuesday, if at all. I could. If at all it is possible for me to come, we'll notify you on the Twitter platform or the Telegram or the WhatsApp channel. If not, please consider that on Tuesday we'll be meeting. Okay. So thanks a lot once again, and happy trading, and hope we get some decisive trend.